welcome back. It's now time to take a look at exchange-traded funds. Of course, that set of instruments is still much unknown to many Nigerians. I'm being joined on the show by the head of research at Vertivo Capital Management, Pabina Yinkere, to tell us more about exchange-traded funds and how they're faring in the wake of the downtrend at the equities markets. Good morning, Pabina.
Good morning. Thanks for having me.
Thank you for coming on the program. Many people are still, should I say uninformed or unaware of what exchange-traded funds are. If you could just tell us what these funds are.
Okay, exchange-traded funds are a subset of index funds, which are a subset of mutual funds, and I'll just explain from the top down to give better understanding. Mutual funds pretty much pulls together funds from different people, different individuals, and invest in a particular basket of securities or on bonds, in equities, in currencies, in anything that can be traded. That's what mutual funds do. It is managed by a professional who invests the funds on behalf of the unit holders. Now, an index fund is different from that in that an index fund tracks a particular index, so it is not exposed to the whims of a fund manager. So it gives you the kind of return a particular index would give you. And exchange-traded funds are index funds, but are different in a way in the sense that exchange-traded funds are listed on the Nigerian Stock Exchange and trade like any other securities that you have on the Nigerian Stock Exchange. The benefit of an exchange fund is that it is not, like I mentioned before, index funds are not open to the skills of an investment manager. So what you pretty much get from exchange-traded fund is a return on the market. So mutual funds can be categorized as what we call active funds, and exchange-traded funds are what you call passive funds. So there's no actual management of it. It just tracks the performance of an underlying security or an index.
So they actually benchmarked against the index from the sectors that they actually pulled from?
Yes, it can be any form of index. For example, we have an exchange-traded fund that tracks the NSE 30 index. There's an exchange-traded fund that tracks the banking index. There's an exchange-traded fund that tracks the consumer goods index. And there's an exchange-traded fund that tracks gold. And currently in the market, we have an exchange-traded fund on offer currently that tracks the performance of the S&P bond index. The application list opened on the 8th of August, and it will run through to the 22nd of August. And I'll explain how investors can benefit from this. If you were an investor today, an individual investor, you would need to come up with about 100 million to be able to invest in a single government bond. So that puts a lot of people outside of that market. Now, what this fund seeks to do, it's pulling together funds, and it will invest in the representative bonds on the S&P index. So what it pretty much does is replicates the price and yield performance of the S&P bond index, and for as little as over 100,000 naira, an investor such as yourself can gain advantage of these instruments.
Well, we'll take a look at how the markets has fared so far this year in terms of the equities market now. And so some of these exchange-traded funds are benchmarked based on the index in the market. Yes. How have they fared? How have ETFs fared?
ETFs pretty much just gives you the return the market gives you. That's what ETFs are for. It will be interesting to note that there is a recent study that showed that only 25% of active fund managers have been able to outperform the markets. So what that tells on a consistent basis. So what that tells you is that the percentage terms of outperforming the market is really, really low. So why not just invest in something that gives you market return? In that case, you outperform a whole bunch of portfolio managers out there. So ETFs pretty much gives you the return on the market. So if you look at the return on the NSE 30, that is what the Vertiva Griffin 30 ETF has given. If you look at the return on the industrial goods index, that is what the Vertiva industrial goods index has returned. So pretty much market return.
Is FX, the volatility in the value of the naira, for those who want to invest, is it impacting on the risk returns of ETFs?
I would say it depends on the kind of ETF, and I'll explain this. For example, there is a gold ETF which Vertiva partnered with APSA. That's the very first ETF that got listed in our market. It tracks the performance of gold, which is priced in dollars. So for every time you have a weakness in the naira, it is actually an appreciation of the value of that index. So for that particular index, the naira weakness has really helped.
For those who are doing the gold.
For those who are invested in the gold.
Right?
You know,
ETF.
you can invest, it's traded like any stock on the Nigerian stock exchange. You can buy it with naira. But as you get that FX effect, it impacts the value of that ETF. But then, when you look at ETFs, like I said, they are traded like any other stock in the Nigerian stock exchange. So you are exposed to pretty much all the things that happen
on the markets. All right, so investors should take advantage of it then.
Yes.
And see how much they can.
I forgot to mention that it's a very low cost entry. Unlike a mutual fund where you pay something around 1%, the cost on this one is about 40 bips. Quite cheap.
Abina Yinkere, Head of Research at Vertiva Capital Management. Thank you so much for coming on the program. And I believe that our viewers have also gotten one or two information as to how to take advantage of the opportunities to invest in exchange-traded funds in the market. On that note, we've come to the end of Business Morning. Thank you so much for watching. We hope to see you on Monday. I am Bolaji Akinwale. Bye-bye.